Okay, so when you think about this whole AI gold rush that's happening right now, what usually comes to mind first?
Well, it's probably the flashy chip makers, right?
Yeah.
Like NVIDIA, or maybe the huge cloud companies, Microsoft, Google, Amazon.
Exactly. They're soaking up the headlines, dominating the stock charts, all the buzz. But it does make you wonder, are we maybe overlooking a really crucial sort of foundational piece of this whole AI puzzle?
That's exactly the question we should be asking. Because while everyone's looking at those front runners, there's this other company, Arista Networks, that's quietly and very profitably, I should add, laying down the essential infrastructure.
The high voltage transmission lines, so to speak, for all this AI power.
Precisely. They're not just enabling AI. You could argue they're becoming the actual backbone.
And that's Arista Networks. So our mission today in this deep dive is to really unpack why Arista might just be the most profitable, maybe the most durable, and perhaps, yeah, the most underappreciated way to invest in the AI infrastructure boom.
We're trying to look past the hype,
Yeah.
get into the sources that describe Arista as this sort of low-key, high-margin builder that's quietly powering the whole generative AI revolution.
So let's rewind a bit. Think back to late 2022. ChatGPT just explodes onto the scene, basically breaks the internet.
But yeah, suddenly everyone gets generative AI. And investors, they scrambled, pouring money into NVIDIA, AMD, all the AI software startup.
But what often gets missed, I think, is the huge challenge that pops up behind the scenes with every single one of these AI breakthroughs. GPT-4, those incredible AI images.
It's the data. It's easy to focus on the compute power, the GPUs doing the math, but the real bottleneck, the architectural headache, is moving these absolutely vast quantities of data in and out of data centers at unbelievable speeds.
We're not talking just big data anymore, are we? This is something else entirely.
Exactly. It's an exponential leap. And your average run-of-the-mill networking gear just can't handle it.
So it's not just the processing, it's the pipes, the plumbing. If the data can't flow fast enough and reliably enough, even the world's most powerful GPU cluster just sits there, useless.
Right. You need something special. We're talking low latency, high throughput, ultra-scalable Ethernet switching, gear that's specifically designed for the insane demands of these trillion parameter models.
And that's where Arista Networks comes into the picture.
That's their sweet spot. They design and sell exactly this kind of cutting-edge networking equipment, specifically these ultra-high-speed Ethernet switches that have become, frankly, essential for serious AI workloads.
So, okay, NVIDIA's GPUs are the brains doing the heavy calculation lifting. But Arista switches, they're the nervous system, making sure all that data gets where it needs to go smoothly.
No bottlenecks, minimum lag, maximum uptime, that's the goal. And it really highlights a blind spot many people have. Without that efficient data movement, the whole AI engine stalls. Doesn't matter how many GPUs you throw at it.
It raises that question, what really powers the AI revolution if the data can't move?
Yeah. And, traditionally, these big AI clusters often used NVIDIA's own solution, InfiniBand.
Right, I remember that. It worked okay for a while.
It did for smaller setups, tightly coupled systems. But the moment you started trying to scale up to the kind of clusters we see now, 10,000 GPUs, 20,000, even more.
InfiniBand hit a wall.
A big one, both technically and economically. It just didn't scale well. It became incredibly expensive and complex to manage at that kind of hyperscale.
Ah, okay. So that created an opening.
A huge one. And that's why we're seeing this major industry shift away from proprietary stuff like InfiniBand and towards open standards, specifically high-speed Ethernet.
Especially for training and inference that might span multiple data centers, maybe even different continents.
Exactly. And Arista. They were way ahead of the curve here. They pioneered 800 gigabit Ethernet switching. 800G. That's the kind of speed hyperscalers need to stitch together these absolutely massive GPU clusters efficiently.
So, as AI infrastructure gets more spread out, more decentralized, and just needs way more bandwidth, Arista's Ethernet approach isn't just an alternative. It's arguably becoming the better choice.
It looks that way. And it's not just us saying it. You had Jensen Huang, NVIDIA's CEO, up on stage at Computex 2024.
Oh, yeah. What did he say?
He explicitly highlighted how Ethernet would be the backbone for connecting their big DGX platforms, their AI supercomputers, across different clouds and regions. That's a pretty significant nod from the GPU king itself.
Wow, okay. That's a big endorsement. So let's shift gears a bit. Talk about Arista's business itself, the model. You hear it described as an anomaly.
It really is quite different, especially when you compare it to a lot of other companies riding the AI wave, maybe burning through VC cash or sacrificing profit margins just to grow super fast.
Arista's doing that.
Not at all. Look at their financials. They're frankly stunning. Gross margins. Yeah. Consistently above 60% for a company selling hardware. That is absolutely elite territory.
60% gross margins on hardware.
Wow.
And operating margins.
North of 35%. Which just tells you how lean and incredibly scalable their operation is. They're not throwing money away.
And cash flow? Are they generating cash?
Oh, yeah. Free cash flow margins around 30%. This is absolutely not some cash-burning startup hoping for an exit. They are a cash machine.
And I read they have quite a bit of cash on hand.
They do. Something like $4.8 billion in cash. And here's the kicker. Zero debt. Absolutely none.
That's a serious war chest.
Yeah.
For R&D, buybacks, maybe acquisitions down the line.
Exactly. And their return on equity, over 30%. That shows incredible capital efficiency, with the kind most tech companies, even successful ones, can only dream of.
So strong fundamentals. But what about the valuation? Is it already priced for perfection?
Well, that's the interesting part. Despite all these stellar numbers, Arista often trades at what looks like a pretty reasonable PEG ratio, the price earnings to growth ratio, especially when you compare it to some other AI-related stuff.
It's not necessarily cheap, but maybe not wildly expensive given the growth and profitability.
Precisely. It feels more like a proven compounder, a company that knows how to grow profitably with a really strong, durable competitive advantage or moat.
Okay, let's talk about that moat. Who are their customers? You mentioned hyperscalers.
It's basically a who's who of hyperscale royalty. Microsoft Azure is a huge one, a longtime partner. They use Arista switches extensively to build out their massive AI supercomputing infrastructure globally.
Okay, Microsoft's a big one. Who else?
Meta, Facebook's parent company. They're also investing billions in AI data centers and rely heavily on Arista for the networking to connect all those GPUs.
Right, so the two biggest spenders right now are major customers.
Exactly. And then there are these intriguing rumors swirling around Amazon, AWS. Even though Amazon designs some of its own chips, the word is they might be increasingly turning to third-party networking vendors like Arista to keep up with the sheer scale and speed required.
That would be another massive potential win if it pans out.
Huge. But the beauty is, Arista isn't just tied to these giants. They benefit from pretty much any significant AI build-out. Whether it's AI startups like Anthropic needing infrastructure, or sovereign AI initiatives, countries building their own AI capacity like Oracle is enabling, or efforts in Europe, Arista provides the plumbing for all of them.
So they're selling the picks and shovels, essentially.
That's a good way to put it. But here's a really critical point, something that elevates them beyond just a hardware box shipper. It's their software.
EOS, the extensible operating system.
Exactly. EOS is the software stack that runs on all their switches. And it's not just firmware. It provides crucial programmability, deep visibility through telemetry that's collecting real-time network data and automation capabilities.
Things that are essential for running these huge, complex AI factories efficiently.
Absolutely essential. Hyperscalers need that level of control and insight. Think of it this way, maybe. Arista is doing for networking kind of what Apple did for smartphones.
How so?
They're bundling really high-quality, reliable hardware with this powerful, intuitive, extensible software ecosystem, EOS.
And that software isn't just a nice-to-have feature. It's core to their value proposition.
Totally. It gives them significant pricing power. It differentiates them massively from competitors just selling hardware. And maybe most importantly, it creates sticky, long-term customer relationships. It's almost like a recurring revenue stream built on top of the hardware sales, driving those high margins and deep customer loyalty.
That software layer sounds like a key part of their competitive moat.
It's fundamental. It's why they can command those premium prices and margins.
Okay, so let's circle back to valuation then. You mentioned it seemed reasonable. As of, say, mid-2025, where was it trading?
Around that time, it was roughly 38 times forward earnings, give or take.
38 times, which, in isolation sounds maybe a bit high for some investors.
It might, but you have to put it in context, right? Is that valuation justified? Well, consider this. Their annual revenue growth is consistently hitting over 25%.
Which is strong growth for a company their size.
Very strong. And the demand drivers from AI, we're still arguably in the very early innings. There's likely a long runway for growth ahead. Plus, remember that balance sheet. No debt, tons of cash. They have zero need to raise capital to fund their growth.
And you mentioned optionality.
Yeah, huge optionality. Think about emerging markets building out infrastructure or the expansion of edge computing, meeting more sophisticated networking. Arista is well positioned for those two.
And there's that interesting fact about them never issuing stock.
Isn't that amazing? They've funded all their growth organically. It speaks volumes about their management, their engineering-first culture, led by Jayshree Ulal for years. It's about self-sufficiency and profitability.
So when you compare that 38x forward PE to peers, how does it stack up?
Well, NVIDIA often trades in the 45-50x range, sometimes higher. Broadcom might be closer to 30x, but maybe with slower growth expectations. Marvell could be up at 55x. So in that context, Arista's multiple looks pretty compelling for its growth profile and financial strength.
Okay, makes sense. But no investment is without risk. What are the potential downsides we need to consider for Arista?
Absolutely. Risk is always there. Number one is probably customer concentration. We mentioned Microsoft and Meta are huge customers. If either one significantly pulled back spending or decided to build more networking in-house.
That would definitely hurt Arista's top line.
For sure. It's a key risk to watch. Then there's competition. Cisco is still the giant in networking overall, and they definitely want a piece of this high-speed AI market. And NVIDIA, with its own networking ambitions, is also a competitor.
So you mentioned Arista has advantages there.
They do. Their first mover advantage in high-speed Ethernet and that strong EOS software differentiation provide a pretty solid defense, a good moat. But competition is always a factor.
What about broader market risks, like the AI hype cycle?
Yeah, that's a valid concern. What if the current AI infrastructure build-out slows down? Maybe an AI bubble deflates somewhat. Or what if GPU supply constraints ease significantly, leading to less urgency in build-outs? That could moderate growth across the board.
And the risk of the hardware itself becoming commoditized, just a race to the bottom on price.
It's always a risk in hardware. But again, that's where the EOS software stack and their reputation for quality and customer service provide insulation. It's harder to commoditize when you're selling a solution, not just a box.
So risks exist, definitely. Customer concentration, competition, market slowdowns. But overall,
While Arista certainly isn't immune to tech market volatility, its business model, its fortress balance sheet, and these powerful secular tailwinds behind AI networking probably make it more resilient than many other players in the space.
right, let's kind of pull this together. When most people, most investors think AI, they instinctively jump to the GPUs,
Yeah.
right? The big foundation models, the software layer.
That's the natural focus, yeah. The glamorous part.
But if you're trying to build, let's say, a diversified AI portfolio, maybe one that's a bit contrarian, you really need exposure to the arms dealers, don't you?
Exactly. The company's quietly selling the essential tools, the infrastructure, the picks and shovels that everybody building AI needs, regardless of who ultimately wins the AI application wars. And that description, it fits Arista perfectly.
And their approach, their whole strategy, is just fundamentally different from someone like NVIDIA.
Completely different. Arista doesn't need to be on the bleeding edge of Moore's Law every 6 months. They don't need to invent entirely new AI chip architectures or place massive, multi-billion-dollar bets on custom silicon designs that might not pan out.
Their job is simpler, in a way.
Simpler, maybe more focused. They just need to keep doing what they do exceptionally well. Ship faster, smarter, more scalable Ethernet switches, and keep enhancing that EOS software that their customers clearly value.
And there's that point about them being a preferred partner. Why is that?
It's crucial. Unlike, say, NVIDIA, Arista isn't trying to compete with its own hyperscale customers by launching its own AI cloud services or inference platforms. They stay squarely in their lane, providing the best possible network infrastructure.
So they're not seen as a threat, but as a pure enabler and trusted partner.
Exactly. That fosters trust and makes it easier for the big cloud players to rely on them heavily for such a critical part of their infrastructure.
You know, in almost every big tech revolution, there's this tendency, isn't there, to chase the shiniest object, the killer app, the viral sensation.
Always. Everyone wants the next big thing, the interface layer.
But if you look back, often the biggest and especially the steadiest, most durable profits didn't come from the flashy stuff. They came from the quiet enablers.
The companies laying the groundwork, building the roads, the pipes, the power lines, the fundamental infrastructure, not the final destination.
And Arista Networks feels exactly like that for the AI revolution, the AI backbone.
That's it. They won't be on the cover of Wired for training some groundbreaking new model. They're not going to create the next viral chatbot sensation. But here's the thing. Without Arista, or companies like them providing that high-speed fabric.
None of it works at scale.
Exactly. The data just doesn't move fast enough. The expensive GPUs sit idle. The AI inference breaks down. It all grinds to a halt.
Which, when you put it like that, really makes Arista seem like maybe the most profitable and, yes, probably the most underappreciated way to actually play this whole AI infrastructure boom.
It's a compelling case. So here's a thought, maybe for you, the listener, to chew on. As our world keeps shifting towards these more decentralized, always-on AI-driven systems, what other quiet enablers are out there? What other foundational, absolutely essential pieces might we be overlooking in the complex puzzle of the next technological revolution?